What up, crew? In the last live stream, we spoke about the fixed range volume profile drawing tool. This is always the first tool that I use on my charts and is essential for finding the current range. So here's a step-by-step tutorial on using it. Stay tuned until the end.
It is known as the FRVP, the fixed range volume profile. Here you can see that I actually have it on my favorites right here, and it's always the first thing I use. You can find it under your volume-based indicators here on TradingView. Very easy to find, and please do favorite it and practice it. Learn to use it. It has so many applications, from being zoomed out to being very zoomed in. This really is one of the best indicators that you can use. To demonstrate this, I'm going to go back to our previous range that we had on Bitcoin, which was our bull flag within our current bull trend. First of all, to understand how to draw the fixed range volume profile, it is very simple. One of the only complicated things about it is to understand how to identify the current range. So what you do to draw the fixed range volume profile is, of course, select it and try to find a space basically below your current range. And all you need to understand when to draw it in is basically the bottom of a range and when you get a nice top. So we can see here we had a nice swing high pattern, which actually turned us around, and we can see very clearly here that market structure had broken. Please go watch the Fibonacci drawing tutorial to understand how to identify when market structure had broken. We can see so clearly here that market structure had broken and we came down to test some support. Already we can see that this is now a top, and this was the last time that Bitcoin took a little bit of a break, and there we can see the range that we want to identify. The fixed range volume profile is, of course, in its title, it tells us we are actually looking at the volume within a fixed range. First of all, pretend that price is somewhere here, right? We have just seen the break of market structure. Basically, what you would do is you would pull out your fixed range volume profile from somewhere over here, right below where Bitcoin entered this range, and you would bring it all the way to the side to try and incorporate all of your candles on a vertical axis as well as the horizontal axis. So here you can see the line all the way bottom left to top right. Just remember, when you're drawing this tool, bottom left to top right, include the range that you are looking at. And basically we just drop it there. And what we will see here is absolutely awesome. There are three things that you initially need to understand about the indicator. Number one, this blue line at the top here allows us to understand our value area high of the range. This is where technically in this range, the price is in kind of overbought levels, right? The RSI tutorial tells you how to identify on the relative strength index the overbought levels, and this is a similar way of looking at it except on price. And what we see here is this entire area above this blue line to the top here is the value area high of the range. Very important. This is where we look for our short positions, and you always want confluence. Okay, very important to understand that this blue line at the bottom tells us the value area low of the range. I will be doing another tutorial on hedge trading, and basically the way to trade this ideally is to open your shorts at the top, open your longs at the bottom, but never really close any of them. It's all about taking gradual profits within each trade. The third most important thing to understand about this indicator is, of course, what we call the point of control. The point of control is the area where the most volume is traded. When we open up a new trading software, most of the time we will see volume levels at the bottom here, right? Which are telling us, okay, here a lot of volume came in. Okay, here a lot of volume came in. And in my opinion, in a lot of people's opinions, that is not the ultimate way to read volume. It gives us our volume on horizontal levels, which is a much better way of looking at it because it actually shows us levels of support and resistance. All right, so our most traded level is the level where the most volume has been traded. And we can clearly see on this fixed range volume profile that this level right here for this white line is the most traded level in this range. There has been the most volume traded. And this level is known as your POC. It is your point of control. The point of control is not where you open your trades. The point of control will tell you whether you are continuing to the downside or the upside. This is where you take major profits. It is not where you open your trades. This is a no trading zone in terms of opening trades because that is actually the fair value price for this asset in this range. And what's very important is to understand that this actually tells us the major levels. So one of the major applications for this indicator is to use it to give you support and resistance zones and levels. Here we can see a spike right there. So what we do is we take a horizontal line on our charts and we put it at that spike. We can also see here another of what we call a volume spike, giving us a support and resistance level, very, very significant. This is actually my preferred way of looking at these volume spikes, is to look at them as support and resistance zones, right? Price often doesn't just hit a level to the dollar. Sometimes it does, but sometimes you have to see them as zones and look for an area that's kind of like where we can see it spike to a certain level, and you actually take your rectangle and you draw it from the top of that spike to the bottom of that spike and you pull it out. And this is known as a support and resistance zone, which of course is also a liquidity zone. A little bit of a recap: we use the fixed range volume profile to understand value area high of the range, to look for managing opening short positions. We look for value area low of the range for opening our long positions. We look at the POC for major profits, as well as an indicator of the trend. Are we going to the bottom? I mean, there's so many applications for this, but you can use it to identify your major support and resistance levels. So significant, so important. And this is really what I would suggest as your first indicator to draw when you come onto the charts. And this can really be used on large market cycles. It can even be used on very small time frames.
Thanks for watching, crew. Show some love with a like and a share, and subscribe to the channel if you're new. Also, join my Trading Academy on Telegram for all of my updates, and of course, always play from a position of power and strength.